Yo, welcome to the introduction to cryptocurrency, where we dive into the basics of crypto. None of that hype, none of that deep dive craziness. Understanding the basics of cryptocurrency to get you ready for the future that is now. Let me jump into it real quick. So, quick disclaimer, this course is provided strictly for education and informational purpose only. The concepts, strategies, examples, and explanations shared in this presentation reflect my personal opinion and experiences. They should not be interpreted as financial, investment, legal, or tax advice. Nothing discussed in this course is intended to serve as a recommendation or endorsement of any crypto, any exchange, any wallet, any blockchain, any platform, any strategy, any financial tool, etc. Okay? You guys get it? Do your own research, take your own risk on investment. Guys, this is personal. This is personal, guys. You need to take ownership in this. What I'm providing to you is the education to get you ready, and then you can step forward and take that ownership. You guys ready to get into it? Let's jump on in. So, welcome to my beginner's crypto course. This is the foundation for understanding the future of money, technology, Web3, the metaverse. In this course, we're going to walk step by step from the basics and tap lightly on intermediate concepts just to get you prepared. Eventually, I want you guys to take my more advanced courses that are going to be trading, going to be staking, going to be DeFi, all these things. Right now, we're going to tap into the basics. Whether you're here to invest, trade, build a business, or just learn something new, this course will give you the knowledge you need to move forward. So, what is crypto? What the heck is crypto? In my space, I feel like everybody's talking about it, but then I ask people who aren't familiar with this technology and they don't even know what it is. So let me start with the beginning. What exactly is cryptocurrency? Think of it as digital money secured by cryptography, meaning advanced math protects every transaction. It runs on decentralized networks, which means no bank or middleman controls it. People can send crypto directly to each other anywhere in the world at any time, 24/7. Transactions are transparent and recorded publicly, creating trust without needing a financial institution. Crypto represents a new way to store, move, and build value. What is the blockchain? So, behind every cryptocurrency is a technology called blockchain. A blockchain is a digital ledger, like think of a massive spreadsheet that records every transaction ever made. Once something is added to the blockchain, it cannot be changed or deleted. That makes it extremely secure and transparent. The network is maintained by thousands of validators or computers around the world instead of one company. And blockchain isn't just about money, guys. It's used for supply chains, real estate, digital identity, gaming, and so much more. Coins versus tokens. This is a misconception that so many people think they understand, but they really don't. So let's break it down. Something most beginners can get confused about is the difference between a coin and a token. A coin is native to its own blockchain. For example, Bitcoin runs on the Bitcoin blockchain. Ethereum runs on Ethereum's blockchain. Solana runs on Solana's blockchain. Correctamundo. Coins usually power the network, pay the fees, and keep everything secure. A token, on the other hand, is built on top of another blockchain. Think of a token like an app running on a smartphone. They can represent utility, governance, gaming items, or NFT assets. So coins run the blockchain, tokens run on the blockchain. Let me repeat that again. So this you can take with you. Coins run the blockchain. Tokens run on the blockchain. Got it? All right, cool. Let's jump into the next one. Stable coins. Stable coins. This is the if crypto is a body, these are the lungs. These are the these are the lungs, okay? Stable coins are a special type of crypto. They're designed to stay stable in value. They're usually pegged to the US dollar like USDT, Tether, USDC, or DAI. People use them to trade quickly, send money faster than a bank, or avoid crypto volatility. But remember, stable doesn't mean risk free. They can still depeg, face regulatory issues, or fail if the company behind them is not transparent. Stablecoins are powerful tools, but you always want to understand the risk. Got it? Now, altcoins. So, what are altcoins? We know what stablecoins are now. We know what a coin and a token is the difference. What are altcoins? Altcoins are simply any cryptocurrency that is not Bitcoin. Okay? Altcoins are any alternative cryptocurrency that is not Bitcoin. They cover everything from smart contract platforms to gaming tokens to artificial intelligence projects. Some altcoins have incredible use case and growth potential, but they also come with much higher risk. Prices can swing dramatically in a single day. I've seen anywhere from 1,000% increase on one token, on one coin. That's why research is so important, guys. Doing your own research is so important. Altcoins are where innovation happens, but they are also where beginners can get burned if they chase hype. Okay? Be careful out there, guys. Now, the granddaddy of them all, let's jump into it. What is Bitcoin? What is Bitcoin? Everybody's talking. Make sure you get a Bitcoin. Make sure you buy Bitcoin. Trump is talking about Bitcoin. Governors are talking about Bitcoin. Politicians and hedge funds and banks, they're all talking about how they're buying all this Bitcoin for what? So Bitcoin is the original granddaddy cryptocurrency, the one that started everything back in 2009. It's often called digital gold because it has a limited supply of 21 million coins. 21 million coins that will ever be in circulation. That built in scarcity is part of why Bitcoin has its value. Every 4 years, Bitcoin goes through something called a halving, which reduces how much new Bitcoin enters the market. Over time, this has helped Bitcoin remain the strongest asset in the crypto space. People use it to store value, move money across borders, and protect themselves from inflation. So we spoke about Bitcoin. Now let's talk about the brother, Ethereum. Ethereum is the blockchain that introduced smart contracts, self executing programs that run automatically. This technology opened the door for DeFi, NFTs, Web3 gaming, and thousands of applications built on the Ethereum network. The way it kind of works is, let's say you have a smart contract that says, if this, then this, complete this, without any middleman, without none of it. As long as this happens, this happens. Contract cleared. That's it. Okay? So Ether or ETH, that's how you most likely see it most of the time, is the fuel that powers everything on Ethereum. You need ETH to run apps, mint NFTs, and interact with smart contracts. Ethereum has one of the largest and most active developer communities in the world, which is why so many crypto projects start on ETH. So now that we know what altcoins are, now that we know what Bitcoin is, now that we know what Ethereum is, how the heck do we get our hands on it? What is an exchange and how does it work? Exchanges are where most people buy and sell crypto. Centralized exchanges like Coinbase, Kraken, and Binance act like traditional trading platforms and are easy for beginners. Decentralized exchanges like Uniswap, PancakeSwap, Phantom, etc., allow you to trade directly from your wallet without a middleman. Each exchange has a different fee, liquidity, and security standards. But remember this rule: exchanges are great for buying and selling, but for storing crypto, make sure you get your decentralized exchange. If the centralized, I got lost on track. If the centralized exchange gets hacked or shuts down, your funds are at risk. I want you to remember that, guys. Buying and selling on a centralized exchange is great, but get it to a decentralized exchange as soon as possible. Okay, what is a wallet? Now you have your crypto. You have your crypto. You bought it on the exchange, whether you use Coinbase or whatever you fancy. Now, what is a wallet? Your wallet is where you control your crypto. A hot wallet like MetaMask or Phantom is connected to the internet, making it easy to use but more vulnerable to attacks. A cold wallet like Ledger or Trezor is a hardware device that stays offline, giving you the highest level of protection. Both types have their purpose, but cold wallets are the gold standard for long term safety. Think of a hot wallet like your checking account and a cold wallet as your personal vault. One of the most important things to remember in this crypto arena is this phrase: not your keys, not your crypto. Your private key or your seed phrase is what gives you true ownership of your asset. Never share your seed phrase with anyone, not even customer support. Scammers, they will try everything to trick you into giving away this seed phrase, into clicking a link, into giving them your passwords, whatever the case. When it comes to crypto, you play the bank. You need to have the same security as Chase Bank. Store your seed phrase offline in a fireproof, waterproof private location. Write it down, never screenshot. And if you lose it, no one can recover it. And if someone else gets it, they get a whole new wallet. It's that serious, guys. Now let's jump into staking. Most of the time when you get on these decentralized exchanges or even on your hot wallet or cold wallet, you'll see this term staking. What is staking? Staking is a way to earn rewards by helping secure the blockchain network. Usually through proof of stake. When you stake your crypto, you're basically locking it up for a certain amount of time. Sometimes they have liquid staking where you can close out your stake and get your money back if you don't want to take that risk. But this basically allows you to lock up your crypto while still letting the network function. In return, you earn rewards, sometimes similar to interest. But staking comes with risk. Your tokens can lose value. You might face lockup periods, and certain networks have penalties called slashing. Staking is a great way to have long term belief in a project, but it should always be approached with understanding and risk management. What is DeFi? DeFi, or decentralized finance, is one of the most exciting areas of crypto. It's basically a financial system that operates without banks, using smart contracts instead. You can lend, borrow, stake, earn yield, or even trade all from your wallet. But with those opportunities comes higher risk, guys. Smart contract bugs, market crashes, and hacks are all a possibility still. DeFi gives you full control, but that control also comes with full responsibility. Trading. There are two main trading styles beginners should understand. First is portfolio trading, simply buying and holding your cryptocurrency over time. It's low stress, lower risk, and proven to build long term wealth for many people. But the one that looks sexy is called leverage trading, which uses borrowed money to make bigger trades. Leverage can multiply your profits, but it can also wipe out your entire account in seconds, depending on the movement of the market. It's extremely risky and not recommended for beginners. Most new traders lose money with leverage, not gain it. Market and volatility. Crypto moves in cycles. We have bull markets when everything goes up and bear markets when everything drops. The emotional trap is reacting out of fear or greed, buying at the top, selling at the bottom. Volatility creates opportunity, but only for those who stay disciplined. Patience, research, and long term thinking will always beat emotional trading. Understanding market cycles helps you stay calm when others are panicking. Security. Oh, security. This is a big one in the crypto space. Security is everything, guys, in the crypto space. Always, always, always use two-factor authentication on your exchange and wallets. Never click unknown links, especially on social media DMs. Scammers can pretend to be support agents, influencers, and even friends. I can't tell you how many times Instagram has created, not Instagram, there has been a replica account of mine created on Instagram and contacted friends and family saying that I was trying to get them into crypto. Usually, when it's on a social media platform, you have to look at the name of the account. They can turn a zero into an O, they can turn a one into an exclamation mark. And these are small things that go unnoticed, but the profile looks exactly like someone you know. Always keep that in mind. Pay attention to the name. Protect your information, triple check every URL, and never share your seed phrase. A little caution can save you from major losses. So now you guys have pretty decent amount of information to get into the markets. Now, what are the best practices moving forward? So if you're just starting out, keep things simple. Only invest what you're willing to lose. Learn before you buy anything. Some major tools that you will need are CoinMarketCap, CoinGecko. These are platforms that you can use to research tokens. TradingView, once you start getting into trading, you can read the charts, you can see the highs and lows and all these things for your research. before making that initial investment. Follow credible educational sources. No hype accounts. No Twitter gurus, none of that, or ex gurus, sorry. Track your portfolio and understand why you're buying something. Do you believe in the token? Do you believe in the coin? Do you believe in the technology behind it, the utility? Why do you want to buy this? Because somebody told you it's going to be a moonshot, or because you know that this is a technology that's going to be utilized in the future? And most importantly, have long term strategy. Crypto rewards those who stay informed, not those who chase trends. Okay, guys? Let me tell you one more thing that you guys are going to need in this space. And not just in this space. This is a very important tool for anyone that does anything online. If the internet is where you spend time, a VPN is what you need. A VPN adds an extra layer of security. When you're trading or using crypto platforms, it protects your IP address, encrypts your internet connection, and shields you from hackers. This is especially important when traveling or using public Wi Fi. If you want to be serious about the Web3 space, a VPN isn't optional, it's essential, guys. So get yourself a VPN. And last but not least, a cold wallet. We spoke about how to buy crypto. We spoke about how to hold crypto on if you want to have a hot wallet on your phone, on your laptop, wherever the case. But if you're looking to get into this asset space long term, we need to talk about a cold wallet. I highly recommend that once you buy your assets, your cryptocurrencies, you get them off of your exchanges, get them off your hot wallet and onto your cold wallet as soon as possible. A cold wallet is your ultimate line of defense because it's offline, it can't be easily hacked. And if an exchange shuts down, gets hacked, or freezes withdrawals, your assets are still safe as long as you store them in a cold wallet. Every serious cryptocurrency investor eventually puts their tokens and coins onto a cold wallet. It protects you long term in your holdings and gives you true ownership of your assets. So here's my call of action. I want to thank you guys for diving into this course, getting your feet wet, and finally realizing what this crypto space is about. Crypto is a skill, it's not a gamble. The more you educate yourself, the safer and more successful you become. Always choose knowledge over emotion. Protect your peace, protect your keys, and stay committed to growing your understanding in this space. And remember, you're not learning alone. This school community is here to grow with you. Let's keep building this together. I want to thank you for your time. And here's my final test for you. Now that you understand how crypto works and where it's heading and what role you can play in this, what will your first intentional step be in shaping your digital financial future?